Okay, so now, because we have this gap here, the one that's shaded, and we have a swing high, we now have technically, quote unquote, a market structure shift. After trading into a discount fair value gap, after taking sell side here with this drop down, we're bumping up against this fair value gap, and we would want to see price stay wanting to go higher. This fair value gap, you have to be mindful of that. So you just can't take a long here and put your stop loss there because you have this inefficiency, and it can come back down into that. So your stop would have to be down here around 89, 89.25. So we've had a really perfect delivery to the low end of the fair value gap here, and we'll see if it wants to rally up and start spooling higher. This is our bearish order block. We don't even want to see this act as a speed bump, meaning it shouldn't be, it wouldn't be ideal for it to hit this and, like, you know, be slowed down at all. We would want to see it go through that, and more specifically, not just enter it, but go right through the midpoint of the candle, which is mean threshold. So when I'm watching this area like this, and I'm thinking if it's going to reach for buy side or attack the daily high going into the close on a Friday, if I have an order block like this, I'm watching price and I want to see it needs to quickly go into the candle's body and go right through the midpoint, which is mean threshold. That's the qualification. That's the little nudge that I'm on side. I'm confident that it's going to do what I'm expecting it to do if it runs quickly through the midpoint of the order block. If it does a run up here and just bounces away from it and just meanders around, that's not as ideal. It means that it could consolidate, or it could reverse entirely and come back against the idea. So I'll annotate the mean threshold on this candle in the event if we get a run. So, what is it? 95.25. So we would want to see it rip into 95.25 aggressively and run right through it. If it's going to rally and go for the buy side, that's how you know to trust it. How do you know, ICT, to trust these moves, yada, yada, yada? And it's because of that. It's tearing into the order block and not respecting the mean threshold, which is this little red level here. You folks are getting spoiled this week, all these sessions of the good old ICT. Alright, to see what it's doing here, this is what I don't want to see. This is what I've just explained to you. We don't want to see it go into the order block and fail to run up into mean threshold and tear through it. What is it doing? It's retracing back down into the fair value gap. That is something that you don't want to see, and it takes much more for it to turn around and go higher from this point. And if you're in a trade and your stop's at 89, as we indicated down here, because we have this fair value gap, it can be a little unnerving for you when it digs that back down into that fair value gap. So we want to see this candle here, or the very next one, because 52 seconds before the turn of the new candle, we want to see the next candle, when it opens, immediately run higher. Not even mess around, just rip higher. Does it tear through mean threshold? We don't want to see it respect it at all. See, that's not what we want to see. We don't want to see that. So what you're watching is you don't want to see that candle turn on you. It's got to stay above its low. dig through. Okay, so now we're okay. Now watch the buy side over here. And much like we just described on the order block here, we want to see the same event here for this fair value gap. So while I don't have this on my charts, my eyes going to these points over here, and I'm saying, okay, I know that price is roughly here at 40.97.5. I want to see it rip through 47.97 rather, 40.97, this price here, essentially midpoint, or consequent encroachment of the gap that is between this candle's low and this candle's high with this one little down close candle. Alright, so we would want to see large range expansion. Usually when you see me doing my recorded trades, I'll type out and say I want to see speed and distance, or sharp decline if I'm looking for it to be bearish. I want to see big range up, green big up candles is what I'm saying. Like, I want to see large range green up close candles. You see how fast we went right to the consequent encouragement? That's that mid-level right here. When I see that, I feel like that's like a confirmation that you would be on side and I'm on side if I'm expecting that. So I would reasonably expect to see it to go through here. Now if it goes through here, we want to see it expand up with a lot of velocity and speed, so that way you can dig into this level over here and take out that high, which in my heart I wish I would just not see it taken out, because 4101.50, even though my last contract didn't get a fill because the spread, the high and the low was called to you in advance today. The fairy tale stuff that they say can't be done. So you can see it's already moved about 5 handles or so. What's the open on that? Close rather. 9250, and there's your 5 handles. It's tearing through the fair value gap, coming back, touching it. Watch the low. It can come back and touch that. It's fine. If it comes outside the fair value gap, watch the consequent encroachment of this wick. That's what my eyes go into. When I'm looking at it, I'm watching, does it support it? I need 3 PD arrays. 3 PD arrays. Once I see 3 of them break, then I'm gonna look to collapse the trade or take some of the trade off. In this case, nothing here is problematic. We should have an expansion here on this candle. Rip through that buy side liquidity and then dig into that 4100. It's pretty neat how it's consistent, isn't it? It's fun. And this has always been available to you. You just haven't been doing it. And when you do this, you learn what it is that I'm doing. And I've been doing this for 30 years, so obviously I'm going to be better at it. But in the beginning, you got to get past that uncomfortable not knowing what you're doing. And you observe things, and you record things, and does these things repeat over and over and over again. So we had buy side taken here, and that would have been a partial for you. So buying the fair value gap, as I mentioned here, we're going to use the top of the fair value gap, which would be the equivalent of this candle's close. I don't want to say that you would have got filled down here because that's not practical. But the closing price here is essentially the same thing as the high of that fair value gap. So 4092.50. So 7 handles from here to here, running out buy side. That's not a bad move. I mean, it's a bread and butter type setup. It's real easy. Those things happen multiple times, in a day. And you could roll your stop to +1 and just see if you have a run up into new highs on the day. But you don't want to be limiting how much you're going to get, because when it gets close to this 345, 350 time window, the macro in the last hour can start really sending this thing higher and run out through here and then keep going a little bit more. So you don't want to ever shortchange yourself in that opportunity. So you could have a limit order to take something off at the new high, like 101.0175 or 4102 even, and then have a runner to see if you can get any kind of additional expansion should it materialize. We don't know, because I mean this is a buy side liquidity pool that has been purged already. Here, volume and balance. Watch that right in here. The consequent encroachment of the wick here. So about midpoint. Draw that out in time, and you're watching, does the price touch it? And if it does touch it, does it disrespect it and go right on through it, or does it fail to even go to it and resume going higher? That's what I'm considering when I'm watching price. I'm not looking at indicators. I'm not looking at moving average crossovers. I'm not looking at supply and demand zones. I'm reading very specific algorithmic price levels that are going to key up on what you would expect in support and resistance. These things do offer that. If you're watching this video live and you watch me outline this 7-handle run here, do me a favor and give me a thumbs up. I was watching, because I'm doing this for free, and one of the things that I would like to see you do is support the live streams. You're not paying for them, but your payment to me for appreciation would be the thumbs up. The more you inspire me to do that, the more likely I'll do more of these. Obviously, you can see it's no real effort on my part. I just didn't want to do them before because it's a pet peeve of mine. Every single time we meet, price seems to know how far I can go on its leash before we close our session out. And that, my friends, is fun. That's what we're looking for. Notice how price went down into this wick here. Consequent encroachment. Beautiful. Redelivery. Buy side. So you notice probably when I'm looking at a run, every time it makes a new high, I always annotate it like this, and I'll take a partial when it hits there. You will be doing that too. So this is called running down equity. So right in here. Now, because we've had one high taken here, and then this high took out that high, we don't want to see any kind of reversal. So this low here needs to stay in place. We don't want to see any of that coming back on it, because then it's problematic, and we don't want to see it basically. And then we want to see an energetic big run up into like 4104, 4105. Big candles pushing really hard, because there's a lot of orders that are resting up here that are layered. That means they're like all up in here. The books will tell you to put it right above the high, but some other traders and fund traders will think, okay, well, let me just go a little bit deeper than that, and I'll be really protected. And that's why when you see in the later parts of the day, the old intraday highs and lows, they'll get really ran out, because they're seeking the liquidity of the funds, and funds have their stops, not just one tick or 1 point above it. It's several handles above it, as much as 10. I know, it's fun. Oh, ICT, why didn't you do this sooner? Because all of this is your responsibility. This is the work that you're supposed to be putting in. But I would have been able to quit my job back in 2016. You still can, but you're going to have to do it on your own effort, not following what I'm talking about. Anybody can follow what I'm saying. That's not skill. I'm just showing you what it looks like, showing you the principles, and what you would be doing when we're not doing it like this. And I would want to see it rip higher here and respect the down close candle here, which is a bullish order block. Now I want to see a big run up, real sudden, boom, boom, like two big bullish candles rip into that 41.04 level, 41.05. What do we have there? Another wick. See that? Does it support that idea of holding it at bay, or does it dig through it and completely go back down into the range of this wick? Because the consequent encroachment of that wick is here. So it can come back to here, but we don't want to see it completely wash out that candle. I'd be lying if I said I didn't want to see it crash here. I don't want to see my 41.01.50 high breached, but it's probably going to happen, so that's okay. It's not the first time I did the daily high and low, and it's probably not going to be the last time. It's real hard to argue about the markets being algorithmic now, isn't it? Controlled, if you will, after seeing a week like this. How on earth does he do this? Where does he get these toys? From another dimension. Alright, so here's our last chance to see it rip through. Big caffeine bar. Big, huge caffeine bar. Just push, 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 real big. A little bit more than that. So you've seen the 41.01.5 levels breached. So anybody that would have been having a stop loss beyond where mine was, and they were holding on to it, there's your fill on that. I'm just not comfortable with having all that retracement all that time. There's so many other trades, as you can see here. I've been outlining here live with you. Remember, we're looking for 41.04, 41.05. Layered, fund, open flow. Seconds. Last 10 minutes of trading. I'm probably annoying some of you. What is that noise? What's he doing? I'm anxious because I've been in furniture stores all day with my wife. Oh, there you go. There's your algorithm. You got as far as, what's that, 41.03 in that even? What's the high on that? Yeah, 4103.00. Still could flip here. It would have been better had we started the run into the old intraday high at 41.0150. If it was doing that right when we got to 10 of 4, if it would have done that, then we would have seen that blistering big run up and pop through that 4104, 4105 level, and maybe even higher than that. So at this point, you would be wanting to take just about everything off and just see if you can get another run on one singular candle. I'm sorry, not candle, but one contract. But this already is not in my favor for continuation. So what you do with the algorithm in the last couple minutes of trading, if you identify a liquidity pool that is likely to be ran out, which is what we were watching today, we were looking for this here. If it runs through it before 10 minutes of, then the macro will run through it aggressively and reach for liquidity that's resting above the high. But since we hit it ahead of and went through it ahead of, here, you see what time it is? It's 3:48. That means it's already delivered running through the high here. So it's going to have a small little flurry. It might go up here, but then the macro will dig back into the daily range. Why? Why should it do that? In an up close day, rarely, and it's not a trending day, but rarely do you see the candle close on the high, unless it's a trending day. Typically what will happen is it creates the intraday high of the day, then it pulls away from that high and closes near the high. So it won't be on the highs, it'll be off the high. So that's what that market on close macro is doing. Very bad gap right there, bumping up into the 41.75 level. If I was making the market, I would intervene here and rip it higher and go right into 4109. It's just this an ICT being an ICT. Yeah, she had me in all these stupid furniture stores. I can't stand looking at like I didn't need to be there. I mean, she could have went out there and looked around for all that stuff. What do you think about this? You know, whatever answer you give your wife, you know, if you're honest, you don't want the answer, and you don't want to lie and say, "Oh yeah, it's great, honey," because then you have to buy it and live with it. So it was just miserable. Here's our 4104. Let's see if we can dig into 4105. Come on. Give me 40. Give me 4105 and then 4109. Rip up there. Just because I'm asking nicely. Technically I'm satisfied because it did give me the 4104, which is what we were talking about. We're down in here. So that is a 10 handle run as well. Better than. In a very comforting Ross tone, ICT has explained it in detail, what it should do, what it shouldn't do. If the market was not algorithmic, if there is no algorithm, I would not be able to do and explain what I just gave you.